Hello, today is March 2nd, 2019. My last call said we wanted a pattern with the early high. We got that. Looked for higher prices. We got that too, but unless one traded in the futures market, even though the call was right, you couldn't make any money with it. That's just the way it goes sometime. During the day, MEJT says this drop is false. Prices should retrace, which they did. Says the rally is false. Gives us a target of 27.9778. That's my call for Monday. But as always, if we gap up smartly, that's probably out of reach. Monday's pattern's the one with the early low, the late high. It tends to be a rally day unless we trade smartly down in the first 1 to 2 hours. If we do trade down the first 1 to 2 hours, it tends to have negative implications. Now this is a wall and this is a gap. These hole-in-the-wall gaps tend to fill at some time and usually pretty quickly, most likely Monday or at Tuesday's open. So it's not impossible, even in spite of this big rally, that we do see this price. But if we do trade higher, we're getting close to this price. Now I was getting ready to get rid of these dates of mine. They weren't as accurate as I'd like, but last month they actually worked. This 11th came within one trading day of a change in trend. The 14th was a change in trend, and the 22nd, which is here, is within a trading day of a change in trend. So I'm going to give them a reprieve. These are my dates for March, and there's a 1 to 2 day window. March the 6th is Wednesday, so any day next week is a potential change in trend. The weekends when we typically look at the long-term picture. Here's the volatility index. I don't know, it's giving me a hard time here. We're now under the lower Bollinger Band. The volatility index indicates the premiums people are willing to pay for puts. When you're under the band, it means there's excessive optimism, and reversing through the band, which hasn't happened yet, is a fairly reliable sign of a top. Doesn't mean it has to happen, but if it happens, you have to believe it. Here's our, give me a hard time again. Here's our DeMark 9139 sell signal. When these things print, one of three things happens. One is it corrects in terms of price. That hasn't happened yet. The other is it corrects in terms of time by consolidating. That's possible. And the other is it fails in grand style, and that hasn't happened yet either. Right now it just says we're overextended. During the recent rally, it would continually fail in grand style, but we're no longer in a bull. Well, the weekends when we talk about the long-term count, here's the end of the rally. Here's the first wave down, and we're trying to find wave B. And there are a number of logical places to put it, none of which have worked so far. And we're now in another logical place, not the only place. Here's the drop. Here's your 78.6% retracement. It's right at the recent high. So if we drop from here, retrospectively, you can always pull up this chart and say, I told you so. But until we get more of a drop than this, you can't be certain this is the place where it'll happen. Now, there's all kinds of ways to count this. I was counting this as 1, 2, 3, 4, 5, but it's perfectly acceptable to count it as 1, 2, 3. And if you count it, ABC. And if you count it as ABC, we finally have a count for this rally, which works. Here was the count here, but if A is actually here, and then you look at from A to B, Here's your A. This count works. You have an A, B, C. You get some nice fib ratios. There's your A. There's your C, and that works right at the 61.8. And then you take your A here and your B, and that's a perfect hit. And follow these through. They all work, and you get the top right over here. Of course, if we blow past this, the whole count falls apart. But at least if we start dropping from here, you can explain it. Now here's your wall, here's your gap, and these hole-in-the-wall gaps tend to fill pretty quickly. Even if it isn't quickly, it should fill at some point. Now here's my target. There's a higher target. It doesn't really count unless it prints some regular trading hours, but it could have relevance in the futures market. Here's what you need if you're a bull. You want to continue to rally past resistance, ideally by gapping over these highs. Unless you drop in the first 1 to 2 hours, the odds favor an all-day advance closing near the high, because we have a low-to-high day. But if you're a bear, this is the best chance you've had in a long time to get paid off. The ideal scenario is hitting an equivalent of the 28.1668 target in futures, finding resistance at or just over it and gapping down smartly. The deeper the drop, the more likely the high's in, and trading under recent lows should seal the deal. So here's our target. Gets killed if we gap up smartly, otherwise that's my target. A low to high day. We have things to watch for. We're at resistance. Breaking through it could lead to higher prices, but if we're down smartly, if that happens, and it hasn't happened yet, but if it happens, there could be a very serious drop here. So we're waiting for Monday to see which of these scenarios, if either, will play out. There's the target, and that's today's call.